If you can sell your house and your cars and everything to get that $10 million, they're going to make you do it. And you can't file bankruptcy to get out of it. So at a bare minimum, I would always tell people to, at least cover what your assets are.
Welcome to Real Money, Real Life, the podcast where we get real about money and the messy human stuff that comes with it. I'm Linda Grizzly, financial educator and your Me Money guide to financial clarity. Each week, we dive into financial concepts and money strategies, but we always tie it back to real life, emotions, mindset, and how money actually shows up day to day. If you're ready for practical tools, mindset shifts, and honest conversations that meet you where you are, not where the world thinks you should be, you're in the right place. Because you deserve to feel confident with your money and good about how you use it. No judgment, no lectures, and definitely no putting yourself last. Hello. If you're listening, you're one of the real ones, the ones willing to dig into the fine print and face the details that most people would rather ignore. This episode is going to take listeners behind the scenes of property and casualty, or P&C insurance, helping them understand what coverage they have, what they might be missing, and how to prepare for rate changes. We'll explore practical ways to review existing policies, demystify umbrella insurance, and unpack why premiums have been climbing so sharply. My guest today is Mary Schepp. She is the agency manager at Brightway Insurance, the Janicki agency, with over 25 years experience in the real estate industry, customer service, and management, including her time as both a loan officer and insurance agent. Mary's a passionate community advocate, and she's an active member of the Rotary Club of Cary Grove, Illinois, and Cary Grove Area Chamber of Commerce. And also, fresh from local farms organization, she's a lover of all things food, and Mary promotes and advocates for a healthier lifestyle through mindful living and is always eager to meet over coffee and share her knowledge and help connect others. Thank you for joining me, Mary.
Happy to be here.
Thanks. So let's talk about, first of all, I know that you have this background in all the things we just said. So what drew you to the insurance industry?
To be honest with you, I spent so many years in mortgages and in finance and private placement. And then after some life events and things change and life happens, the opportunity to get back into this side of the world, I had an option to go back into mortgages and I had an option to go in insurance, and I figured I did the mortgage part, so let's try the insurance part. And truth be told, you don't need a mortgage. Everybody needs insurance. So the mortgage industry is fantastic, but there's a lot of ebbs and flows, and you don't need a mortgage. So when the market's bad, people stop buying houses for whatever reason. You kind of dry up, and there's nothing you can do about it. On the insurance side of things, you kind of get the best of being able to help people and educate people and provide a service for them. But then at the same time, you always need insurance. So even if you're not buying a house, you need car insurance, business insurance, boat insurance. I mean, Tina Turner insured her legs at one point. So you need insurance for everything.
That is so true. You do. And there's insurance available for almost anything you can think of. So what do you enjoy most about helping people with their insurance needs?
I'd have to say educating people. The amount of times that insurance policies are written wrong, or people don't know what they have or know what they could have or what they don't have. It's almost every single time that we write a policy for somebody, there's something that we're educating them on, telling them about, or opening their eyes to things like the fact that if you have a home-based business, it might only be an accounting firm that you run out of your office at home. But I mean, if something happens, you're not insured for that just based on your home policy. So there's a lot of stuff that people miss, and it's fun for me to be able to educate people and insure their businesses and their homes and their families and their 5Ks and all of this different stuff. So it's just fun to help educate people on the stuff that they need and protect their assets so they don't lose them if they get sued.
Yeah, and it's an important conversation right now because there are so many like natural disasters happening, right? So we just had a storm here
Yeah.
in Cary, Illinois, where you and I are. And I know that my house got hit and I had to file a claim. And my neighbor, they also got hit just as bad as we did, but they said their deductible is really high. And so they're not even sure they're going to file a claim or even fix their house,
Yeah.
which is crazy to think about, you know? And if you just heard that, that was my doorbell, because all the people are ringing my doorbell
I
constantly
know.
because we just had this event. It's constant. Anyway, so I would love to dive into this and talk more about this, because I do think this is a really important conversation right now, because rates are going up and things are happening because there are so many disasters and things like that. So, but first, before we get into all of that, I want to help listeners understand what falls under property and casualty, or what's known as PNC insurance.
So property and casualty is a very broad term of insurance. And that's why most of us in the insurance world or liability world or real estate might know what those things mean. The average homeowner is not going to know when you talk about property and casualty, or back in the day, what they call fire policies, things of that nature. So it is very much, at least one side of it is one that sounds like property is, your property insurance covers your physical asset, your car, your house, your boat, from that damage. So your house burns to the ground, your property insurance covers that property. The casualty side of things is a little bit more difficult to explain to some people sometimes, because unless you're an insurance agent, you don't see liability around every corner. And that's what the casualty side of it is the liability portion of that. So I trip and fall in your backyard. You hit me with your car. Granted, there's property because your cars are damaged, but the liability of you hitting me to fix me, my broken bones, my, out of work time, my whatever, my cause or my loss of use of something, that's a little bit more on the casualty side. So the two of them put together is typically what will make up a complete policy. But they can also be separated, because a lot of times, people only want liability insurance and they don't, they'll what we call self-insure. So if you own a condo, you might not want property insurance. If you were an investor and have 500 condos, you might only be concerned about your tenants throwing parties and someone getting hurt on your property. So you might only have the liability portion of it, or that casualty side of it. So it varies depending, but that's the easiest way is to separate those two. Is one is for the physical property, and the other side is your legal liability arising out of an accident or cause.
Great. Thank you for that explanation. And then I did mention umbrella insurance in the beginning. So I want to just call to attention, maybe you can explain what that is, even though I don't need to get deeper into that at the moment.
So umbrella is what we would call an excess policy, and there's a couple different kinds of umbrellas. So without going too far down the rabbit hole of all of the different kinds of umbrella policies you can have, the easiest thing to say is that I personally would recommend an umbrella policy for everybody. And the reason why is because it picks up where your other insurance leaves off. So you wouldn't think that you would need more than $250,000 in insurance on your car. People think liability insurance or full coverage, which full coverage isn't a thing. We could talk about that. But so let's say you hit me and it's your fault and I break my toe. It's no big deal. My insurance covers it. I got more than enough on my car. We're good. But if you hit me and I shatter my leg in 6 places and I need 7 surgeries and it's $2 million worth of hospital bills and time off work, that car insurance isn't enough to cover that. So when you have an umbrella policy, your car insurance would pay out first, and your umbrella policy is what picks up the rest, so that I don't have to come after you for any of your assets, the equity in your home, the equity in your cars, your, equity in stocks, bonds, because the only thing that I can't go after in a case like that is your retirement. Everything else is up for grabs. So for the cost of an umbrella policy, to pick up, if you have a swimming pool, if you have whatever, especially if you have assets, it's very important to have those things. So it kind of picks up where your main policy leaves off. And if you're driving a vehicle, especially with how expensive cars are, and we live in a litigious society and people like to sue you because, their neck hurts a little bit and you rear-ended them, It's for the cost of an umbrella policy for a couple $100 a year, it's well worth it.
Great. Thank you for that explanation. So we're talking about property insurance, casualty insurance, and then umbrella that covers over and above what that might cover. So if someone's reviewing their policy, if they pull out, let's say they pull out their homeowner's policy, what's the first thing that they should look for on a homeowner's policy?
So, I mean, there's a lot, but at least what I have found is a lot of people, they don't even know what their deductible is. So many times with certain carriers, they'll split the deductible. So you have an all peril deductible if your house burns down, if, a pipe ruptures in your wall or something like that. Then you have a wind hail deductible. So they'll see one number and they'll think that, I have $1,000 deductible when it really is 1%. So that could be 1% of the total replacement cost of your house. So if you have an $800,000 replacement cost, you could have an $8,000 deductible. And as you and I are discovering with all our neighbors, they're thinking like, oh, I got $1,000 deductible. This is going to be great. I can get a new roof after this storm. And then they find out not only do they have a higher deductible, but they don't have the coverage on their roof that they thought they did. So reviewing your deductibles, actually reviewing your coverage limits, how much you actually have, and the type of coverage, because there's a big difference. And at the end of the day, if you don't understand what's on there, you better pick up the phone and call your agent and ask them to explain the things that you don't know. Because otherwise, like us, you're going to get hit with a massive storm and flooding and all this other stuff and be terrified to find out that you don't have coverage.
Yeah, I think that's one of the things that I've learned over the years. Luckily, not the hard way, but in talking to people and in doing planning and things, as there's different types of water damage.
Yeah.
One type of water damage might be covered and the other type might not be. And there's different types of deductibles. So even within the same policy, there's things that are covered and aren't covered and things that cost more and don't like, it's so complicated. So it's interesting that you say like you should have your policy reviewed with your agent, but I don't think that my agent, I mean, they send me like an email saying,
Sure.
Your policy is renewing, but do they really reach out to try to go over your coverage with you? They don't. So I've in the past been proactive, probably not as often as I should be though, about like looking over my policy or calling them to be like, hey, has anything changed? But I got used to that because I did that in financial planning. I would look at people's policies and say, do you have this? Do you have that? So what do you suggest that people call up their agent every year and go like do a personal review over it?
I do, because I mean, for instance, we have a carrier that just recently changed their coverage, their underwriting guidelines, and what they will and will not cover, the age of a roof. So things and that's where, the average person, I would hope that they would remember, but they're not going to remember. They're not going to remember to ask if they have replacement cost versus cash value on their roof. They're not going to remember if there's a different wind hail deductible or if they have exclusions. Most properties have certain exclusions that they won't cover, or cosmetic damage that's not covered. Do you have roof and siding matching? So if your roof is 15 years old and the insurance company says, we're only going to replace this 10-foot section that got damaged, well, now you're one of those people that's got a patch over here and it doesn't match your roof because you don't have the endorsement that says if they can't find a match, they'll replace the whole thing. So if you have a carrier that changes any of those underwriting guidelines and says we're no longer going to offer that, or we're only going to offer it if you have this, or if your roof is this old, or so on and so forth, they might have emailed you and said, hey, by the way, at renewal, your premium is only changing by $3, but we also changed your deductible, changed your roof replacement from replacement cost to cash value. So you're only going to get, 50% of the value. And all you see is that it changed $3 and you didn't read it. So if you call your agent and talk to them every single time your policy renews, you can at least go through those line items to make sure that nothing has changed from one year to the next. So you don't get blindsided by those terms. And, it's definitely worth reviewing, because if you don't, then, you are one of those people that ends up crying because something isn't covered when you were hoping it really was.
Right. And I think I mean, we talked about homeowners insurance, but I think it's the same with your auto insurance, right? Or even your boat
Yeah.
insurance. Like the same type of thing can happen where things change and you don't even know they've changed. So, how do people know if they have enough? Because I think that a lot of people are just worried about, getting the coverage and having the card that says, "Hey, I'm covered," especially for their car, to have the proof of insurance. But how do you know if it's enough? How do you decide?
So there's certain tools that we use depending on what we're trying to value. So if it's for home insurance, all of the carriers have a program or software that we use to determine the replacement cost of your house. What it would cost to rebuild. So in the event that the whole thing burns to the ground and we need to rebuild it, it's software that's very similar to what like a general contractor would use. And sadly, a lot of people mistake that for the sales value or the resale value. And they'll tell me, well, why are you insuring my house for $700,000? I bought it for $300,000. And I don't care what you sold it for. You could build a 500 square foot house on the coast of Florida and it's going to be a $2 million house. I'm not going to insure it for $2 million. I'm going to insure it for 200,000 because that's what it's going to cost to rebuild it. And those are the kinds of things that people don't think about. So there's different things that we use to determine the replacement cost or the coverage from that aspect. It's very easy to look at something and determine that. Where you start to get into using someone like you to tell me what kind of assets does this insured have? What do they got? Do they have $20 in the bank, or is this someone that if I put a gun to their head could come up with $10 million? Those are the kinds of things where we would say, okay, we need to increase their liability. So sometimes it's a conversation between two different professionals to figure out what that number actually is.
Yeah, that makes sense. That does make sense. So, something interesting that happened to me the first time that I ever got umbrella insurance. So, I went and I said, "Hey, I want to get umbrella insurance." And my agent said, "Okay, well, in order to have the umbrella insurance, we have to up your coverage on your home and your auto because it has to be a certain amount before we can even do the umbrella." And I was like, "Well, wait a minute. Why don't I already have that coverage on my home and my auto if that's like the amount?" So that was like eye opening to me to be like, I never asked for the cheapest rate. I probably said I want, like you said before, full coverage, which we'll talk about that in a minute. I probably said I want this on this car, this on that car. And when I need homeowners insurance, I probably didn't say I want ABC. I just said I need a policy. And now I'm going in to say I need an umbrella policy. And they're saying, well, we have to up the coverage on the other policies. So I think it's interesting that they didn't just give me that amount. So that opens up a whole nother conversation as to why wouldn't they just offer that amount when you're going in and saying I need a policy?
I mean, the truth of the matter is there's a lot of people in the industry that they just want the policy. So it's very hard to sell a policy as a salesperson and not feel like you're selling to yourself. I wouldn't pay that much money for something, or I wouldn't need that coverage. I'm not you. I don't have kids. I don't have whatever. I don't have all these extra things. It's just me and my husband. What I'm going to insure myself for is completely different than what I would insure somebody else for. But many times they'll go, holy crap, this person's got like one claim and they're younger. I couldn't imagine in a million years paying $400 a month for my car insurance. So they're not going to do that. So I'm going to give them state minimum at $25,000 worth of coverage because I feel like that's what they would pay. And then they don't know because they don't ask because they think you're the professional. And then someone like I've had clients. I had a guy work for a car dealership. He was furious. He goes, my car is $75,000. Why do I have $25,000 worth of insurance? Same thing. The guy his previous agent assumed he wouldn't want to pay that much and gave him the minimum. And we ended up increasing his coverage for the same reason. Like you have to have at least $250,000 worth of coverage on your car. And typically most carriers are going to require you to have at least $300,000 on your home because they know that's the threshold. Those are the numbers that usually pay out on a home or an auto claim that are average, because umbrella policies don't pay out very often. So they know that if it's typically less than $300,000 in liability on a home or auto, if we require you have at least this, it means that only 20% of the time or whatever it is that an umbrella policy will actually have to kick in for those bigger claims. So you're 100% correct. It's sad, but people just assume that you're not going to want to pay that because they pass judgment. And then you find out and you go, why wouldn't you have offered me that? Now, here's the kicker. Almost all of the time that we take someone from a lower coverage to a $250,000 coverage or higher, their rate actually is lower than what it was before. Because the statistics shows that if you're responsible enough to carry good coverage, you rate better. Because as a responsible person, you're going to treat your stuff better, you're going to drive better, you're going to be more responsible, and you will file less claims. So you actually get rated better when you carry better insurance.
Wow, that's super interesting. I've never heard that before. Wow. Okay, so going back to the umbrella policy, I know that when I was working as a financial advisor, I knew that our average advice was you need umbrella coverage for whatever your total of your assets are, right? So if you add up everything that you have, your home, your cars, your whatever, and your net worth, basically your accounts, then we say you need, if you have $500,000 worth of assets, you need 500,000 in coverage. If you have $1 million, you need $1 million. Is that the way you guys do it, or how do you determine how much somebody needs in umbrella coverage?
A lot of that does come into play. So that is a very significant portion of the determining factor. But to be honest, I mentioned earlier that we live in a litigious world and people like to sue just for the sake of suing you. And, it used to be that an attorney would say, okay, she's worth $300,000. We can sue her for that and reasonably get that amount of money. And whatever the claim is, the accident, whatever, warrants that kind of money. Now it doesn't matter what is warranted. Juries like to pay out and they like to make people whole that have been hurt. So almost all lawsuits start at $1 million and then they go up in $1 million increments. You typically don't sue someone for $1.32 million. You sue them for $1 million, $2 million, $3 million, $4 million, $5 million. So we kind of take that into account. So somebody who has a home, an auto, a couple drivers, we typically will put $1 million umbrella on that. They don't have a whole lot other than the equity in their home that they could liquidate in the event of a lawsuit. Chances that someone's going to sue them, it's going to be for a cool $1 million all the time. Somebody who does have assets, as soon as the attorney discovers those assets, then they'll go, okay, this is a pretty decent accident. We could actually get $3 million out of this. So at a bare minimum, you want to protect what you have that could be liquidated. So your retirement is safe. But if a judge said, you know what, you kind of rocked this guy's world, we're going to allow them a $10 million claim. If you can sell your house and your cars and everything to get that $10 million, they're going to make you do it. And you can't file bankruptcy to get out of it. So at a bare minimum, I would always tell people to, at least cover what your assets are. And then obviously, if you're someone of influence or prominence or politics or anything like that, you might want a little bit more, because even if you don't have it, just because you're famous, someone might sue you for more because they think you have it.
That's interesting. It's very interesting.
Yeah. It's a fun world we live in right now.
Yes, it is. All right. Speaking of that, we're going to go, that's a great transition to the next question. Why are insurance rates skyrocketing? I mean, it's crazy the amount that they've gone up over the last couple of years.
They have. So a lot of people like to blame hurricanes and fires and everything that's happening out in the rest of the world, which, part of that does have a play. Insurance is a business and it's a for-profit business. So you can't fault the insurance companies for wanting to turn a profit. And everybody throws them under the bus. State Farm right now is getting hammered in the news because they're asking for a rate increase. And they took $11 billion in claims last year. And it's across the whole country. So yes, some of the money that we pay as policyholders is those claims across the country. But we also, the last 10 years, have had a record number of claims, over 30 billion a year. This year, the fires in California alone breached $60 billion for one claim. So we're going to have a record year again. Then you have the total losses. So the cost to reconstruct these houses that are burning to the ground, because they have these huge houses on these big properties without fire hydrants, and those are big claims. The apartment buildings, stuff like that, when you have these older apartment structures that are burning down. So these claims are huge, they're massive. Plus, you add on the fact that most people these days are using their insurance as a maintenance package. My dad used to, go out every summer and check the roof. Every winter, the gutters, guardrail, everything, the caulk and the windows. People don't do that anymore. So they're expecting that insurance will pay for their roof. You can get a free roof, you can get free siding, you can get free windows. And if you think about that, if you pay $1,200 a year for the next 10 years, how much money is that? And if you file a roof claim today and you pay $16,000 for your roof, how long does it take the insurance company to recoup the money that they paid to fix your roof and turn a profit on you? So how long is everybody going to be able to pay $1,200 or $1,500 a year for their roof when everybody is letting every roofing company knock on their door and say, hey, I can get this for you for free? So between the mentality of treating it like a maintenance package, the record claims, and then simply the cost to rebuild things. In 2020, I insured my house for $300,000. It's a 1,800 square foot old home here in Illinois. And now it's insured for $775,000. The cost per square foot to build a house is more than double what it was. So it's not just the premium rate that's increased. It's actually the cost to replace the home, the cost to replace cars. We all know they're more expensive. So if a car is meant to crumple and save the people and we have more total losses, that means it's more expensive for the insurance carrier to replace every vehicle that crashes. So it's kind of the perfect storm of all things between labor costs, construction costs, vehicle costs, claims. They all hit at the same time, and we're paying for it.
Yeah, that makes sense. Is there anything that people can do to keep the costs down? I mean, other than sacrifice protection? But I think it sounds like you already answered that kind of when you said actually better coverage might be cheaper.
And a lot of times, on the auto, a lot of times the better coverage is cheaper because you rate better because you're more responsible. On the home side, there's a lot of things that you can do to adjust the coverage. Personal property. Somebody like me and my husband, who is just the two of us, we don't need as much personal property to replace, the tables and chairs and linens and clothes in our house if it burnt down, versus somebody that would be in the same house but has 4 children. So we can adjust that coverage down safely without sacrificing anything because we don't need that much. We also keep a higher deductible. I mean, we keep a $5,000 deductible. Not everybody can do that because, if you're a first-time home buyer and a storm hit, you might not have $5,000 for your deductible. So there's still that balance between what is affordable and what makes sense for you. But now that we're in a better position, if anything for less than $5,000 or less than $10,000 happens to my house, I'm just going to fix it myself. I'm not going to file a claim. I'm going to save the claim for when a storm like we had where that rips half the roof off or, puts golf ball size hail through everybody's windows. That's what you use insurance for when a pipe breaks and costs $100,000 worth of damage to your house, not, $5,000 worth of siding. That's kind of the point of owning a home. So there are some things that you can do to mitigate the cost. But unfortunately, it's going to be on the rise like everything else. So we're going to have to take the good with the bad.
Okay. Yeah. No, that's great. I hadn't thought about reducing the coverage if you don't have that many things in your house and like comparing it to how many people are living in the household, right? So that's something new for me. Let's switch over back because I want to go back to what we said before about full coverage. And I think that that opens up the discussion also to what's the difference between collision and comprehensive and all that. So give us just the general breakdown of what all of that means.
So many people, like I said, think that there is liability and full coverage, and it's partially true. There's there's no such policy as a full coverage policy. It doesn't exist. It's not a thing. There's a liability policy, or what we would call a complete package. The full coverage was coined back in the day when banks started lending people money to purchase cars. Historically, you had to have the money to buy something. You saved up the $1,000, went to the dealership, bought the car, and took it home. You didn't finance it. So if the bank is financing it, they want to make sure that if you crash it, something's going to pay to replace that car because there's a loan on it. So liability is the portion that you are legally responsible to carry because it fixes the people that you might hit. So you hit me, it's your fault. The liability fixes me and my car. When you add collision to that policy, same scenario, you hit me, it's your fault. Liability fixes me and my car. Your collision portion fixes your car. So I've had people call me and go, well, I paid off my car, so I don't need full coverage anymore. Well, your car's still worth $10,000. Would you rather pay a $500 deductible and get a new car? Or, because they don't understand how it works. So the comprehensive portion is anything outside of that collision. So somebody steals your catalytic converter, a rock goes through your windshield or something of that nature. So the comprehensive is all of it. So when you have liability, collision, and comprehensive, all of those three pieces together is what people will typically call full coverage, but it's just a complete auto policy.
Yeah, great. Thanks for that explanation. All right, so I want to talk about the mindset blocks or internal obstacles that people have when they think about insurance. And I think about like when my kids started to drive or when they got older, a little bit older, and they were like, I got to pay insurance. I don't need insurance. I'm like, you absolutely need insurance. First of all, you have to have it legally. You have to have the liability, but then you also want to have your car covered. So there's been times when they've had the collision and there's been times when they haven't had it, depending on what car they had. But I mean, I had to explain to them why it was needed because I think they still have that mindset that it's not going to happen to me. Right. So I know that's one mindset block because I've seen it in younger people, but what other things do you see when people come to you and talk about insurance and you're like, oh my gosh, you need this, but the person's they're not buying into it.
I mean, it happens a lot. It happens all the time. And that is one of the major blocks is it's never happened to me, so it never will happen to me. And, ultimately I end up telling them some of our personal stories that, unfortunately as an insurance agent, not only have I seen things happen, but as a human being, my husband was in a major car accident that, almost took his life. So if the gentleman that hit him didn't have good insurance and an umbrella, it might not have turned out the way that it did. So, I mean, those are the kinds of things where it is most common that people will have that mentality of it's never happened before. I've never had an accident before, so I'm never going to have one. Or I'm a good driver, so my kids are good drivers. We don't need that. And the statistics say very much otherwise. So that is the most common one. And then unfortunately, the other mindset is premium. They don't, when you think that you have a liability option or a full coverage option, and I quote you $1,000 and the other guy quotes you $500, and they just go, oh, I'm going with a $500 policy because, he was cheaper. And they have no idea the differences between those two things. They are not, it's the difference between going to McDonald's and a steakhouse. You can get beef at both places, but you're going to pay a different price and you're going to get a completely different item. So that's the two main things is, it didn't happen to me and it's not going to happen to me. And the other guy was cheaper. So sadly, that's the nature of the business.
So you're an insurance broker, right? So you have different companies that you work with, correct?
Yes.
And so you help people compare apples to apples.
We do. And not all carriers can be apples to apples because so the forms that we write insurance on a lot of times are a standard form. And then they can embellish on those forms and add, the bells and whistles. So as an independent, we have access to almost the entire insurance industry except for the captive carriers. So State Farm, American Family, they're what you would call a captive carrier. A State Farm agent can only write with State Farm with very few exceptions. So we don't have access to those, but we have access to everybody else. So we can look at them and say, between these 10 carriers with almost exactly the same coverages and deductibles and all of the bells and whistles, then we can pick which one comes out with the best premium. And it changes on a daily basis. One carrier might want to be in the market today. So Travelers might be the best for home and auto in Northern Illinois right now. But then they'll write a million policies and say, okay, you know what? That's enough. We have too much. We don't want to be overexposed. So we're going to increase, this, that, and the other. We're going to price ourselves out of the market. And somebody else will buy into the market, National General or Progressive or whoever else. So it does ebb and flow on a regular basis.
Great. That's really interesting because you think that people are looking for like one specific company. They think they want to go to, you just said Progressive. So I'll say that because they see the commercials and they're like, oh, I'm going to go to Progressive. But that's not speaking to their exact location and what's happening there right now. So that's super interesting.
Yeah.
All right. So action steps for listeners. Number 1, we already know that they should review their policies with their insurance agent at least once a year.
Mm-hmm.
Tell me what, like the main questions that they should ask their insurance agent.
Typically I would ask, obviously confirm what your deductible is, what your actual coverage limits are. I would ask my agent, if there's any gaps that you see in my coverage, like am I underinsured? Am I overinsured? Because as a normal everyday person, you're not necessarily going to know if you are over or underinsured. So when you ask them that question, like, I don't know, and you just play that person saying, I don't know what I should or shouldn't have. I don't want to be at the bottom and maybe I don't want to be at the top. Can we go through this to kind of review and see which fits me best? At least that opens the conversation for them to feel like they can review your whole policy with you to go over all of those optionals, like, higher limits on your car and, rental car coverage and towing coverage and trip interruption and glass coverage for your windshield, the water backup coverage for your house, roof replacement. There's a million coverages. So when you say it like that and just say, what am I, do you see any gaps so we can review it? It opens up the conversation for you to kind of fill it in.
Okay, great. I love that. All right. So are you licensed in different states or are your PNC licenses per state?
So they are per state. Each state has a Department of Insurance. So we are licensed with individual states. Our office specifically is in, I think, 9 states now. So Illinois, Indiana, Wisconsin, Missouri, Kansas, Arizona, Florida, North Carolina, and then of course Illinois. But Brightway is a nationwide franchise. So when it's someone like I just sent someone to one of our agency owners in Michigan. So, we can work with other agencies if we have to.
Okay. So anybody can call you.
Yep.
And you'll help them get where they need to go.
Absolutely. Even if they're not my client, I'm happy to walk someone through their policy.
Oh, wonderful. All right. Well, so that is a great call to action. Where can they find you, Mary?
So we are at brightwayjanicki.com and you can call us anytime at 847-807-3200.
Wonderful. Well, Mary, I want to thank you so much for this wonderful conversation about so many things, P&C insurance. I know there's a lot more we could talk about,
Sure.
But I thank you for your time and look forward to learning more from you maybe another time.
Sounds good. Thanks for having me.
Thanks so much for listening to Real Money, Real Life. Want to see what's blocking you from financial confidence or discover your money personality? Head to the resources page at lindagrizz.com for our free quizzes. That's LINDAGRIZ.com/resources. If you're loving what you're learning, be sure to subscribe and leave a review. I'm your Me Money Guide to Financial Clarity, Linda Grizzly, and I'll catch you next time as we talk more real money, real life, because you deserve to feel confident with your money and good about how you spend it. The content shared here is for educational and entertainment purposes only. It is not financial, tax, legal, or planning advice and does not constitute therapy or mental health counseling. Please consult an actively licensed and qualified professional for advice or help specific to your situation.